Hi, I'm Kevin Clune. I own Clune and Company, an equipment leasing and financing provider. We've been in business since 1957. We are an independent company, independent from the equipment manufacturers. Nowadays, all the equipment manufacturers want to capture the financing. 9 out of 10 times, though, an independent offers a better deal than the equipment manufacturer's own financing program. So that's why we exist. Basically, we purchase the equipment you like from whomever you want at whatever price you've negotiated. So, and then we lease it to you. The lease is non-cancelable for the initial term. It could be anywhere from 2 to 5 years. And leases have different structure options. You could flat out own it at the end, but for technology, most people don't want to own it at the end. So they'll structure a lease where they have various options to be able to get rid of it, trade up, buy it, return it, whatever at the end. So they have multiple options. The reason leasing companies exist is because we do things that banks won't. And specifically, a bank will ordinarily not finance a piece of equipment without a huge down payment. They don't consider it adequate collateral. So with a lease, you pay nothing down ordinarily, and we inherently take more risk than a bank. And that's why the leasing company or the leasing industry grew in the 50s once the enabling legislation was passed for gap treatment of leases, how a lease is to be considered for a financial statement and income tax purposes. So, yeah, we do things that banks won't do, and that is finance 100% of the equipment cost. There's a really broad spectrum. We lease almost any kind of equipment. However, the demand for equipment that is vulnerable to obsolescence is more heavily leased than something that isn't. For instance, we were talking about medical technology, IT equipment, things like that are very heavily leased, where office furniture, which doesn't get obsolete, isn't leased as frequently as those that have the obsolescence factor involved. So we lease an awful lot of computer-related things to businesses, telephones, copiers, what we used to call blueprint equipment, the wide format equipment used by contractors, architects, engineers. We lease construction trailers, for mobile offices, mobile classrooms, furniture. I mentioned the niche in medical equipment too. So as far as the range of customers, we focus on any customer with good credit that's been established for a while, and it matters not what category, what business classification they are. They would first pick a purveyor, the equipment supplier, bargain for the best deal, the best cash price, go ahead and get a quote from that vendor for their leasing program, and then call us. They may have a better deal, but we probably will be able to beat them. The advantage is it doesn't tie up your capital or your line of credit with your bank. When you own a business, you'll probably have established the ability to borrow through your bank, and that will always have a limit based on your net worth, your profitability, etc. And leasing equipment allows you to use the leasing company as a secondary bank, basically, and leave your lines of credit unused for more profitable use elsewhere. If you use your bank line of credit to purchase equipment, then every dollar you do that is $1 less available for when you really need it for the normal ebbs and flows of business, make payroll Friday. The disadvantages of leasing, if any, are that the rate you pay is normally a little bit higher than that you'd pay at your bank. But that is commensurate with the risk. Your bank is secured by normally all of your assets, where the leasing company is secured only by that piece of equipment. So the rate may be a tad higher than your bank rate, but it'll be competitive, especially if you shop. It behooves you to check the terms and conditions of a lease contract, because leasing is an unregulated industry, very, very different than banking. So people will assume that leasing companies, because they're bank-like, are regulated like banks, but in fact they're almost totally unregulated. So a leasing company can make money in ways that would absolutely astound you. All kinds of hidden fees and gotchas and contract requirements that a bank couldn't get away with. So it does behoove you, again, to check the terms and conditions of any lease before you sign it. It's just a great way to put equipment on a treadmill that makes it easy to upgrade it. Okay, so at the end of the lease, you'll have options to renew the lease, send the equipment back, purchase it, trade up into newer, better equipment. And for anything that may go obsolete on you during the lease term, that's a really good thing to have, all those flexible options.